Hello everyone. If you started trading in the years 2020, 2021, or even 2022 is when you started, what I want to talk to you about quickly is how trading has changed, or I should even say investing has changed. And I think this is important because when you start or where you start in the stock market is very indicative of what your experience will be like moving forward. Okay. And what I mean by that is I have up here a chart of the triple Qs. And of course, this is the ETF that tracks the NASDAQ. And this is on finviz.com. And if we look back to the year 2020, moving in from the beginning of the year to when the pandemic hit, we saw a large decline in the Qs or in the NASDAQ. Really, all of the markets dropped. However, it's this stretch right here that I want to talk about. For those people that started trading in the year 2020, say around March, April time, one of the things that you'll notice is that the market was very upward moving at the time. And I'm not even going to talk about the reason why, because really it doesn't matter. It's just looking at this chart and you can see that the market was going up, up, up. And really, it didn't matter where you bought or when you bought in the stock market or when you bought the Qs. In this particular case, literally from April of 2020 all the way to, say, what was this, September 2020 or early September, literally any day that you bought it would have been, you would have been in the green 2 to 3 days later. Then we had a little bit of a pullback here, and this was a roughly 10% pullback, we'll call it. But then from there, the market continued to stretch higher. And the Qs went from, we'll say 260 all the way up to about 340. So there you're talking about maybe a 20, let's see, that would have been maybe 20-30% increase. Then we go from 340 all the way down to about 300. So you're talking about a 15% decline, followed by a revisit up here, slight rejection of this, call it maybe a double top, at least at the time. It pulled back, but again, this pullback was from 341 to 317, so this was a 10% pullback. Oh, the sky is falling. But then it continued on, and look at this March. It went from 318 all the way to 380, so you're talking about a 20% move from March of 2021 to September of 2021. Now, to put it in context, the historical average return on the Qs is probably somewhere between 12 to 14% on an annual basis. So when you have markets moving 20% in 6 months, if I did my math right, let me double check my math here, because this would have been 32, 64. So if I'm up at 380, yeah, this is roughly, I don't know, 18, 20%. So obviously in 6 months, this is a hyper cycle. That's not normal. That's not the normal rate of return. All right. Then moving on, you see we were at 380. We come back down to 360. So you're talking about maybe a 7% decline. From 360, we go up to 410. So that's giving you about a 15% increase. It's just rough math there. However, so as you can see, this was pretty much, you could buy the dip. That was the name of the game at that time. And I remember I was trading in the market, as I'm sure a lot of people were. You'll remember that you had high flying stocks. We had GameStop. We had just tons of stocks that were just high flying. AMC, even the Qs. I mean, this ETF, what it did in 2 years is just amazing. It's just amazing, the performance that it did. So if you traded in these years, then your conception of the stock market was obviously shaded by this experience. And honestly, even for people that that have traded before, you know, if you've traded back in 09 or 2010, when you come into a cycle like this, it's easy to get caught up, or it's easy to fall into this notion that the stock market is always moving upward. And of course, that's where the danger lies. And what I will say, this is my experience and opinion with the stock market. I call it like this cycle. It's like a washing machine. It's a monster. Literally, I feel like it takes people up here, has them riding the wave, And then in time, right, because everything has to kind of revert to a mean, or you could say everything that goes up has to come down, or everything has to cycle through, right? There's nothing that's going to continue on forever, because if that was the case, we would just continue to ride the train upwards. So right here, you can even notice the difference on the chart. You see this, not getting too technical, this was a moment of consolidation. This is a weekly chart. So this is where the charts for several weeks, or the candles there, for several weeks, it was closing within this same range. Then all of a sudden, you start to see the breakdown, right? This would have been a support level, because you saw it here. This would have been a support, kind of even into here. Say, all right, we have some support, because this was a previous resistance. So you got the kind of this somethingness here, but you saw it broke through, and then it came back up, and now all of a sudden you see this pattern. I love reading charts. The pattern is, right, you come a high here, and then bam, you have these lower lows, and you have lower highs. Here we had up, higher highs, and then here you see we have lower lows. It breaks down, comes up, it doesn't come up here, it just comes up, breaks down again, comes up. Who knows, tomorrow, you know, may do whatever, but obviously you can see that this same trend, and this trend lasted quite some time to get up here. So we call the staircase up, and then of course kind of that more rapid elevator down there. So I say all of that to say, if you started trading during this time, you're used to things going up, now they're coming down. So outside of stating the obvious, then what's the point of this video? Well, the point is twofold. If you started investing in this thing in this time period, it is important right now, depending on the state of your portfolio. If you're kind of bleeding out and your portfolio is just in the red heavily, like mine is, it might be time for you to stop and reevaluate before you buy your next stock, before you go to dollar cost average or average in, and recognize, if you haven't already done so, recognize that we're literally in a different environment. And I know it may seem obvious, and I'm sorry if this is a waste of your time, but we're in a totally different environment. Whereas this was the way up, we now have to be prepared to kind of be defensive and dodging some of the moves that are ahead of us. We can still keep our long-term bias that the stock market would be going up, but we also have to take the time to recognize that where we are now, you know, this is a straight staircase up, straight elevator down, and it can continue to fall. Same thing here. Hopefully that didn't mess up. Same thing here. This is just straight up and down. And then with the Qs, same thing. And I just want to say that if you're experiencing pain in this market, experienced traders are as well. Hedge fund managers are. You know, we're all experiencing the same thing. We're all experiencing these declines, and it doesn't make you a bad investor and a bad trader. So you can throw some of that condemnation out the window. What you need to focus on now is, how are you going to navigate? How are you going to stay solvent if the stock market were to continue to drop? You know, ask yourself right now, if the Qs, if you're in this ETF or if you're in individual stocks, if your individual stock right now were to drop 40%, would you be able to withstand it? Would you be okay? If the answer is no, you would not be okay, then, you know, you kind of act accordingly. I'm not saying to buy or sell, but I think if you can prepare yourself now for additional drops, then at least in the future, you won't be disappointed if they come. And then, of course, if something happens and the stock market shoots right back up, then you would be good to go. So the purpose of this video is to not predict what's going to happen or tell you that the sky is falling or the sky is not falling. The purpose of it is to say, hey, we are in a totally different environment than you were when you started in 2020 or 2021. Or even if you just got wind of the stock market and you started in 2022, then really you've had nothing but enjoying this decline. And it's to say that we're in this period, but remember, these periods do not last forever. And as long as you can maintain your rationale for why you bought your stock and be able to stay solvent, be able to stay in the game, if the stock drops another 20, 30, 40, 50% without having to sell or without feeling, you know, if you can hold on to your conviction for why you bought your stock, if that's the case, or dump it. If you're holding a loser, just dump it, if that's where you find yourself being. But making those decisions so that way you're not constantly maybe stressing about the stock market, but you're actually able to say, okay, I know where I'm positioned. I'm in my position. I'm ready for the long run. It's going to be a success. So anyways, I just wanted to point that out. Newer traders, keep the faith, act accordingly, pace yourself, prepare for the inevitable in the stock market, whether upward or downward. Just find yourself prepared. And I wish you the best out there, because these are definitely tough times. And as always, I really appreciate your time. And this is Dr. Diffins signing off. Bye-bye. It's imperative, especially if you're investing in the stock market, it's imperative that you have an emergency fund.